previously on Islamic Finance Future Focus. We discovered how fintech is influencing the Islamic finance world and how it's changing consumer banking habits, moving them away from traditional banks and modes of doing finance.
We're seeing that the banking community is starting to move towards technology-based solutions, and customers are responding by using branches much less. They like to do things online, they like to do things on their mobile phones.
Being a developing sector, Islamic finance has had challenges in getting its message to consumers. But fintech is enabling Islamic financial institutions a different method of engagement.
You have a number of non-bank technologies putting together consumers with the providers of finance, and it's only a matter of time before more and more Sharia fintech players arrive on the scene.
The example of the Kenyan farmer with a mobile phone who doesn't have access to branch banking but can exchange money and trade goods with people using his mobile phone, because everybody has a mobile phone now, is an excellent example of social inclusion. So combining this socially inclusive technology with the ideals of the Islamic economy is absolutely what Islamic finance was made for.
Cryptocurrency, a decentralized currency powered by blockchain, is proving controversial in the Islamic finance space. Some prominent scholars deeming cryptocurrencies impermissible.
But unfortunately, a number of these senior scholars don't have the technical know-how. They don't understand how the global financial system works. They don't understand the monetary system. They don't understand what financial products are available. And so they're making these decisions, these fatwas, in the absence of any detailed technical knowledge and without consulting the relevant experts.
The very prestigious Mansion House in the City of London played host to the IFN London Islamic Finance Week 2018. Participants from all over the globe descended on the venue to discuss the growing Islamic finance industry. Some of the key issues and themes influencing global Islamic finance investment were on the agenda for examination and discussion, including Brexit, the ascendancy of fintech, the 2030 vision of Saudi Arabia, climate change, and the potential of furthering green investments. Gold has always been an integral part of finance across all Muslim and non-Muslim jurisdictions for time immemorial. This precious metal has had great significance for humans and continues to do so.
Gold has a long tradition in Islamic countries as jewellery and as money. Because gold was money, it is a ribawi item, which means it needs to adhere to strict conditions when it's transacted between individuals.
Gold has never gone out of prominence. So gold is one of the oldest asset classes in the world. It's been with us for the longest time.
Gold is a deep and liquid global market. Through London alone, we trade 240 billion a day. To put that in context, if you were to compare the gold market to government bond markets, it would be the third most liquid market in the world. And that's one of the reasons why the world's central banks still hold gold as the bedrock of their reserve asset. It is a preserver of wealth, and it will give them access to liquidity whenever they might need it.
In 2016, the Accounting and Auditing Organization for Islamic Financial Institutions, or AOFI, in collaboration with the World Gold Council and Armani Advisors, approved what has become to be known as the Shariah Gold Standard. This has made the trading of this precious metal Sharia compliant, thus facilitating the entry of Islamic finance into the gold market.
AOFI did rule that actually gold is both currency and commodity. It is permissible as an investment, provided it is traded and structured in certain ways. Two of the most important characteristics is that products have to be 100% backed by fully allocated gold, and they need to be settled on a spot basis.
With the issuance of the Islamic Standard by IOFI in December 2016, that gave gold a chance to play a meaningful role in the financial space for the Muslim community around the world. I think that's created a catalyst for gold for the community.
Prior to the existence of the Shariah Gold Standard, Islamic investors had been reluctant to invest in gold. Sharia finance rules require gold to be in a physical form as an underlying asset, which is seldom the case in the conventional metal trade. As a result, conventional gold-based offerings are deemed impermissible by Sharia scholars. Sharia law dictates that gold must be sold on weight and measure and cannot be traded for future value or for speculation.
I think what's happened in the Islamic world is that up until very recently, as November 2016, there had been no harmonized standard on gold, and therefore there are differing views as to gold's role in Islamic finance.
There's no issue when you're buying physical coins and bars for cash. But when you think about modern day gold products, so things like gold exchange traded funds, gold saving plans, even gold on mobile phones, up until recently, there had been no consensus among Sharia scholars as to how those modern day gold products should be traded and structured. And this is certainly something that the World Gold Council could see has hampered the development of gold in the financial sector in Islamic countries. The new IOFI Sharia standard on gold clarified the way in which modern day financial gold products had to be traded and structured in order to be Sharia compliant. And this has been a real milestone for the industry.
The arrival of the Shariah Gold Standard has permitted Muslim investors to put their money into bullion and coins, therefore opening up the opportunities for increasingly diverse portfolios.
Gold is the only asset in your portfolio that has no credit risk. As we saw during the financial crisis, even assets deemed to be safe were not safe. Gold has no credit risk when it is traded and structured in a Sharia compliant manner. Gold is also a highly effective portfolio diversifier, and we've looked at how gold moves in comparison to Sharia compliant equity indices, to Sukuks and to REITs and other property indices. And it shows a statistically insignificant correlation with those assets, making it a really, really powerful diversifier. And the third aspect I would highlight, which I think is particularly important for Islamic finance, is liquidity. You know, the pool of liquid assets in Islamic finance is much more limited than it is in conventional finance.
There is concern that the continued surge in interest in gold for the development of Sharia-compliant gold products could result in increased prices and gold soaring, as Islamic financial institutions around the globe, which hold some $2 trillion in assets, are expected to double that asset base by 2020, potentially shaking up the very small physical global gold market.
So it's very difficult to assess the impact of one individual factor on the price, because it depends on a multitude of factors. What we do expect, though, is that the new standard, which has led to new products being issued, will lead to an increase in demand in Muslim countries for gold. Whether or not that will translate into the gold price, though, is a very different matter.
It would appear that all that glitters is gold in the Islamic finance sphere. Financial products structured around this precious metal as a result of the introduction of the Shariah Gold Standard have elevated gold to prominence of late, either as an underlying asset or as an asset class itself.
There are a lot of products structured around gold today, and typically they are provided to the mass affluent, the high net worths, and institutions. What a lot of fintechs like Shariah Gold are doing is to bring these products down to the mass market, to the end user, the man in the street.
I'm aware that there are a number of other products in the pipeline. So the standard has really solved a problem. It has given banks and other providers the confidence to spend time and money in issuing new Sharia compliant gold products. And I certainly believe there's a lot of pent-up demand amongst consumers because it's removed any fear from households, savers and investors about non-compliance.
Muslims can now around the world invest through gold as an alternative form of savings, particularly for the vast majority of Muslims that remain underserved and unbanked around the world. And for them now they have an alternative to just putting money in the bank account where typically they earn very little interest or return. With gold, because it typically returns around the rate of local inflation, they now have a way to escape the poverty trap.
I think we will now see the role of gold develop into the institutional space, similar to what we saw in conventional finance when the ETFs were launched. Suddenly you saw asset managers, pension funds, even insurance companies being able to buy gold as readily as they would any other equity. And I think that's what's changed in Islamic finance.
See a clear affinity between Sharia-compliant financing and addressing climate change. However, this is translated into very few programs on the ground. Financial commentators argue that Islamic finance should be leading on climate-sensitive initiatives, not be falling behind the curve.
Islamic finance has been lagging when it comes to social responsibility, environmental considerations, because unfortunately in previous methods and modes of Islamic finance, that whole aspect of the decision-making process wasn't included. We were looking at basically the industry and we were looking at debt, and we weren't really paying attention to labor laws, we weren't paying attention to environmental impacts. But that is changing.
If I talk of general ethical investment, ethical product, yes, there is a lot of work to be done. For a very simple reason, let's not forget that a lot of people try to become speculative, they want to make short-term gains, and in that whole pursuit of making quick money, they start compromising on basic principles of human society. So from that perspective, I would say Islamic finance has an edge because they keep on talking about things which are not to do things which are sustainable. They don't talk of anything which is not sustainable. So I think Islamic finance has a very important role to play to enforce ethical way of working or investing in this world of finance.
Well, one thing we have to do is we have to transform our economies. We now have a moral and ethical reason to rethink the way we run our economies. In the short term, we can do things like creating green products and green Sukuk, and our investors at least to make that choice themselves when they have the opportunity to make that choice. But there is a bigger question here. We've been sitting on our hands for a long time on this issue. We have to work really, really quickly to make this change.
Sukuk, which are Islamic bonds, generate returns to investors without violating Islamic Sharia law and play a significant role within the Islamic finance sector. However, the issuance of green Sukuk is in its infancy.
Green Sukuks and the combination of green and Islamic finance is very new. The first green Sukuk was issued by Tadao Energy in Malaysia, and it absolutely had a domino effect. That was issued for a solar power plant, and we've seen 4 issuances so far from other Malaysian solar power plants. We've seen that the Malaysian market has taken off, and we've seen 1 issuance from the Republic of Indonesia.
Malaysia is a global leader of Islamic finance. issuing more than 60% of the world's infrastructure Sukuk. It continues to remain one step ahead, having pioneered the issuance of green Sukuk. The 250 million ringgit green SRI Sukuk issued by Tadao Energy in 2017 is to finance the construction of large-scale solar photovoltaic power plants.
Malaysia has been the innovator in the green Sukuk. The Malaysian Securities Commission was actually very innovative and forward-thinking when they issued the SRI Sukuk framework. And I absolutely think that now with Indonesia issuing a green Sukuk, we're going to see a domino effect to other Islamic markets and also hopefully to Western markets.
Green Sukuks are a good initiative, and they're a good way for Islamic finance to start, tackling the problem of social responsibility and environmental impact. But I think Islamic finance needs to go beyond just green Sukuks, which is something that, hasn't really taken off beyond Malaysia and perhaps in Indonesia recently. But it has to be encompassed in the decision-making, the investment process for the asset management industry, which is still operating in kind of a halfway, and they're either impact or socially responsible Islamic finance funds or they're Islamic finance funds. And those two have to fuse for us to be able to make real considerable impact and say that we are environmentally responsible as well as Sharia compliant.
Countries such as Malaysia and the UAE are most active on the green Sukuk front out of the top 10 key Islamic finance markets. It remains to be seen if the will is there in other Muslim-majority countries to adopt green Islamic bonds and other initiatives to take Islamic finance a step closer to climate-resilient growth. Green Sukuk could also facilitate bridging the gap between conventional financing and Islamic financing.
It's key to take some learnings from the Malaysian experience. Here you had the Securities Commission working with the market actors, and they adopted local regulation that was straightforward and provided incentives. I think that's key to growing the market in other places and also to look from the learnings from the green bond market. I absolutely think that there is a lot of convergence between Islamic and ethical or green finance, and that these two fields could learn from each other. I think that the way that green finance has worked both with capacity building and bringing together the different market actors, Islamic finance could learn in the same way. You are reaching two distinct investor groups. You're reaching the Islamic investors with the Sukuk, and then you're reaching the green investors with green. So you're already reaching two dedicated investor groups. So you're broadening the potential investor base.
Green Sukuk are not the only vehicle to facilitate climate-resilient investment. There is no conflict between making money and growing new lines of business to help protect the environment and contribute to society. But those operating within the Islamic finance space need to take a more considered approach.
At the very minimum, Islamic banks in Nigeria or Kenya or other countries can be thinking about what the nature of their environmentally related lending is. Should they be rolling out programs for solar rooftops? Yes, they should. Should they be looking at ways, types of lending to invest time in growing because of its extra contribution to addressing the challenges that those societies face? Yes, they should. Part of being responsible financiers, of being responsible investors and lenders, is also thinking about what it is the community needs, not just waiting for deals to come to you through the door. And that's one of the things in my view, all financial institutions around the world need to be thinking about.
Green Sukuk and other green investment products could not only contribute to sustainable projects globally, but also be a key growth driver for Islamic finance. However, a concerted effort is required, particularly by those countries which operate within the Islamic finance market, to ensure that green financing becomes the norm rather than the exception. A tall order perhaps, but not impossible.
Islamic finance has a lot of catch-up to do because that's an area that Islamic finance has ignored. But if Islamic finance is to appeal to the masses and to be able to appeal to consumers, they don't just want to know that what they're participating in or investing in is Islamic, but it's also having a positive impact.
It's certainly something that's resonating with institutions and corporates, and most certainly it's resonating with the investment market. And if you look at Muslim investors here in the UK, such a high proportion are from millennials or from Generation Z. Actually, their considerations do extend. Sharia compliance absolutely dominates. If any product structure solution is not Sharia compliant, then it won't resonate. But actually, impact, environmental considerations, governance are ranking very highly on the market agenda as well, and particularly with this part of our market investment.
This is not a choice between losing your money to save the planet. Rather the reverse. Focus your money on investments that will help save our society and save a future for our children, while at the same time making a return. This is what we can do, and this is what the evidence shows we can do. But it does require a little bit of extra energy to get the markets going, to open them up. And we have to switch our economies to green. We have to switch our financial systems to green so we can mobilise private capital. Don't wait 10 years. Do it now. The next 12 months is the main thing I would say to everyone. Remember, it's our children's future at stake here. It's our generation's challenge to fix. By the time our children grow up, it's too late.
The impact of the key issues and themes influencing global Islamic finance discussed in this program are already beginning to become evident and drive this sector. Islamic finance has now entered into uncharted territory with fintech. It's seeing a growth of opportunities arising from the establishment of the Shariah Gold Standard, and it's also moving slowly towards more sustainable and green investments. In a continually evolving world, Islamic finance will need to continually adapt to the changing landscape and innovate in order to grow and make its mark on the world's finance stage.